makes over 200K.
Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Lee Wright Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening, everybody. How y'all doing? Hopefully everybody doing well. My eye itching. My eye is itching. Dog tired. Just got up. What's going on here, everybody? That's in here. Excuse me. First of all, let me start off by saying good evening to everybody. Good evening, everybody. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome, but I want to give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Arania Grande. That should be Big Spot if you don't hablo español. And you're in tune to another episode of the Intraday Price Action Recap. This episode of the Price Action Recap being brought to you by the Smart Money Manuscript, a little course that I put together myself to help individuals not only just understand what the stock market is, basic money management, taxes, preparing for retirement, trading, investing, swing trading, day trading, ICT concepts, understanding the ICT concepts, it's a mentorship also. Every second Saturday at 12 p.m. Eastern Standard Time, we get together and we do a little Q&A inside the Smart Money Mentorship live channel inside the course on WAP. Yes, you can get all of this for $69.99. If you click the first description in the link below, first link in the description below. I think it's the first link, the one that talks about getting the Smart Money Manuscript. Can't beat it. Can't beat it. I think it's a pretty good course. People who've taken it say it's a pretty good course. Hey, look at man, who we got in here? We got Jim up in here. I see Lump up in here. I see Joe up in here. See Hit I say Hit Learn Shell made that comment at 427. That was so long ago. I don't know. Hit Learn Shell might still be in here. I see Kim up in here. I see SJ. Shout out SJ. SJ up in here. I see Valentine up in here. Today was a particularly, I think that's a word. It was rather difficult for me to get a good read on price today. I don't know if it's like Christmas cobwebs that got me like, had me a little off my game this morning. I don't know if it's like just one of them days. Sometimes you just like one person may be struggling seeing price action, and another person might be like, "Oh, it was clear as day to me. I saw exactly what to do." That happens sometimes. But today just was it was rather difficult for me to get a good read on price today. And like going into the day, I totally admit going into the day, I was, bullish going into the day. And I want to see a nice long setup. And early in the market open, I believe, nice rally just took off like 100+ point rally to the upside. Right. And I didn't get a chance to I didn't get my entry. Like I was waiting to get picked up at a price on it was like on a sub 1 minute chart, and I didn't get picked up, and price rallied. So I waited for it to come back, to a discount, and I was trying to be disciplined, and instead of shorting back down in that 100-point move, I just waited for it to come back to a discount. And from there, I proceeded to get slapped all about the head, neck, and shoulders. Right? Slapped all about the head, neck, and shoulders. And in the morning session, I was like 1 for 4, had 3 losses and 1 winning trade, 3 L's and 1 W in the morning session. And I went to the gym, had me a good workout, stopped by my mama house, came back and took another little scalp in the afternoon. Right. It was actually a pretty decent scalp. It wasn't like a small scalp. It was a decent scalp. Right. But either way it go, I ended the day green. I was back in the green this morning I had the 3 losses and 1 win, and I was actually in the green. And then this afternoon I saw another opportunity that made sense.
And I'm kind of glad that I scalped it because I don't know, price just wasn't delivering to the liquidity that I wanted it to hit. Like on a normal day, like I'm like these liquidity points that I'm shooting for is really like low hanging fruit, but it wasn't delivering to what I wanted it to deliver to. It was, it was moving algorithmically, right? But it just wasn't wasn't really reaching to where I wanted it to reach to. And, you know, um, starting the day off like losing back to back to back to back, it's tough. Um, so you jumped in the earlier buy and then jumped into sales. Must have got the bounce in the afternoon. The afternoon was actually a short. I took a short this afternoon, and this morning I I got stopped out on two longs and a short. I got stopped out on two longs back to back because I went into the day with a bullish bias and I was looking for buys. Got stopped out on two longs. Got got stopped out on a short, and then I got a long that played into my favor this morning, but I got stopped out three times in a row. Bam, bam, bam. It was rough. It was rough. Um, why am I sharing this? I'm sharing this because when it comes to, well, not just trading, anything in life, right? When you when you are being mentored, or if you are following someone that you know look up to, or you tapped into somebody who you think they are good at what they do, a lot of times we tend to put them on a pedestal that's so high that we think that they don't have to face adversity. We think that they don't ever mess up. We think that, they, what I'm saying, like, oh, they go out here and they trade and they make this money, and it's like super easy for them. But that's the farthest thing from the truth. And it would be disingenuous of me to, you know, just come in here and be like, oh, I ended the day green, you know. Oh, I ended the day, you know, I was able to make $1,500 today. I was able to make $500 today. I was able to make $2,000 today, right? Without sharing with you how I had to struggle to get that $1,000. And when I say struggle, I don't mean like fight the market or spiral, like break rules and act crazy, right? But it's hard to take one loss. One it's so hard for your first trade of the day to be a loss. That is gut wrenching. I don't care who you are. I don't care how long you've been doing it. If you sit and tell people losses don't mean nothing to me, little Timmy Rogers' honest opinion is that's a bold-faced lie, because I have desensitized myself from the wins and the losses, but wins still feel good and losses still feel bad. right? I've desensitized myself where I've I've gotten to a point where losses don't make me spiral like they used to, right? Now I have my days when I may just be off my game or something might be on my mind and a loss pissed me off so bad. I'd be like, I'm gonna get you back, market. I'm gonna get, and I'd go to war with the market. And a good 7 times out of 10, the market beat me about the head, neck, and shoulders when I try to fight the market. A good 7 times out of 10, I come out on the losing end of it. So I've desensitized myself to where I don't celebrate when I win, and I don't just crawl up in a ball and die when I lose. But just for your first trade, let alone first three, your first trade of any, I don't care what, I'm talking about on a Monday, it's worse. On a Monday, ain't nothing like ending a Friday red and starting off a Monday red. Those are the most gut wrenching, hardest things for a trader to deal with. I loathe ending Fridays red. What do I call Fridays? Gang, y'all know I call Fridays Don't Force It Friday. I call it Don't Force It Friday for a reason. Because, boy, look at here. Going into the weekend on a red, I don't care if I end the week green, but if I have Friday, if Friday is red, oh, that pisses me off. And then to start off Monday with a loss, it's a shot to your ego, right? It's like it's difficult to just deal with. You start thinking, you start looking at things like, man, I'm better than this. And when you're not at the point to where I am, where you can actually focus and look at it and be when you, because you can tell when you're about to get stopped out. So when I'm about to get stopped out, I'm reading the tape. I'm going back through. I'm looking at trying to see what I missed. Like, what did I miss? What did I miss? What did I miss? I'm going through looking at what I missed in real time before I eat, because you can see you can see when the trade not going in your favor. You're like, you, because you see the signatures like up. It shouldn't have violated that down close candle. It shouldn't have did that. When a buy program, it shouldn't have went past that down close candle. What did I miss? I started looking at the price to see what did I miss. You know what I'm saying? And if you're not at the point where you can start looking at price and be like, hey, what did I miss? What did I miss? What did I miss? Right? And you don't understand why you're losing, that's when you start to panic. You start to do stupid stuff like maybe reversing your trade. Don't, whatever you do, never reverse your trade. Because I'm going to tell you what happened. And the reason why I say that is because when I first started trading, right? And this ain't no shot at nobody, but I learned about reversing my trades when I was taking my friend's Jason's course, right? And there was like a training in there about reversing your trades, like just reversing the trade, like take it to this point where you think it's going to go, then reverse it and take it back to another point where you think, just doing like support and resistance type training or whatever, right? And there was a time where if the trade was going against me, right? Yes. Oh, you back in Columbus? Well, not quite. They like, it's not forcing. What's the? No, I'm saying, but he on the way back. Okay. All right. Did everything go well for him up there? I saw some. He said he enlisted and they had the whole thing. And okay. So he signed officially. He's an official airman now. He go to the Army. Oh, I thought he said Air Force. Army. No, he go to Army. Oh, so he an official soldier now. Yeah. He going in so with that's what a soldier is all in the Army. Yeah, you got really? So yeah, Army are soldiers, Navy is seamen, Marines are Marines, and the Air Force is airmen. Well, I thought you thought everybody in the military was soldiers. Technically,
exactly. So I like
Yeah.
I know like, oh, you're a soldier, but you're specifically a seaman or specifically an airman,
Yeah.
but you're a soldier.
Yeah. If you ever hear somebody say a soldier, they talk about somebody in the army. The Marines is the only one that's named. Yeah, yeah, Marine and Marine. Oh my goodness! Don't never call a Marine anything but a Marine, huh? I don't know. I never was in the Coast Guard. I don't know nobody that was in the Coast Guard. So, huh? I guess they'll be. It's Coast Guard. They're on the water. Maybe they seamen too. I don't know. I don't know. Ask Google. All right, drive safe. Um, I don't know. I can't remember what I was saying, but yeah. Let's get to Price. Did Price do anything today that caught you off guard?
You was just warning people not to ever reverse their trade.
Oh yeah, yeah, yeah. Don't reverse your trade. I ain't in the zone no more, so I don't know what I was gonna say next. Thanks for reminding me where I was, but I don't know what I was gonna say next. But let's go ahead and get to it, man. I've been running my mouth for a while. All right. Um, real talk. It takes more than just looking at the charts and saying, "Hey, this is what price gonna do. This is where price gonna go." It it requires real talk. So I just wanted to be real with y'all, as I always do. I don't know how to do nothing but be real, man. I don't know if it was my upbringing. I don't know if it was something that's just in me, like through my DNA, but like, like lying, like not standing on your word. You know what I'm saying? Tony Montana taught me a long time ago. All I have in this world is my balls and my word. And like anybody really, but like a man that don't stand on his word, I can't stand that. I can't stand that. And I teach my boys the same thing. Don't don't be no liar. Say what you mean and mean what you say. Even if it's hard, even if you gonna get in trouble, say what you mean and mean what you say. You know what I'm saying? So when I get on here, man, I try to keep it hundo bundo with y'all. The good, the bad, and the ugly. All right. Because these markets will chew you up and spit you out, run you over like a frog in the street. You feel me? All right. It ain't nothing personal. All right. It ain't nothing personal. It's all business. So if you go in there with your feelings, if you want to, go in there with your feelings hanging all out on your sleeve in this market will chew you up and spit you out. You hear me? On the weekend chart prep, talking about the low resistance liquidity run, right? I was talking about I want to see this stay intact for the sake of a low resistance liquidity run going up to finish out the market maker buy model, right? Right now, the algorithm looking like forget you, puck. I'm gonna go get that liquidity. All right. We also talked about in the weekend chart prep that there was liquidity here that the algorithm could very well come get. If we drop down below that daily low, we said there was a daily fair value gap and this liquidity right here that was resting down there if the algorithm got heavy, if the market got heavy, right? You don't have to believe me. You can go back and look at the weekend chart prep, talked about it, right? And you know, um, what is healthy price action? When you manipulate the opposing liquidity before attacking the draw, right? So what we do, I wanted to see it just take out this daily low and then continue up, right? Acknowledged the liquidity pool here, right? And where did we come? We came down into that liquidity pool, down to the bullish order block right there. Thus far, the bullish order block is supporting price. Will it continue to support price or will we lose it? All right. Um, hey, who knows? But what we got to do, trade what we see. All right. Today is Monday. All right. When you start out a week going down, right? What does that do? That is either going to be a bullish week or it's going to be extremely bearish, right? Because if you want price to go up, healthy price action is to go down first. You go down. Why? Because if you want price to go up, that means you're bullish. If you want price to go up, that means you're looking for opportunity to buy. If you want to buy, where do you want to buy? In a discount. Where's the discount? Down. So it goes down first, manipulates sell side, enticing short traders to get short, right? Stopping out long traders that's already long, and then reversing, stopping out the short traders, get retracing back to a form of discount, giving opportunity to accumulate more long positions, and then deliver into the buy side liquidity. And what does that give us? The power of three. We accumulate, we manipulate, and we distribute, right? So we're starting the week out going down. We're in the midst of a higher time frame buy program, right? We're right here, stone's throw away from completing the market maker model, right? As here we can see that we're on the right side of a market maker buy model, right? The completion of the market maker buy model here is right here. These relative equal highs here. Matter of fact, they run all the way back here. Those relative equal highs right there, right? But for that market maker model there, that's the completion, all right? We're also on the right side of the larger market maker model right there on the, right? This is our larger market maker model here, okay? Down there, we got a smart money reversal down there. Got this huge little area of accumulation there where we're looking for some offset accumulation, right? So once we complete this market maker model, that will complete the offset accumulation of this area of accumulation right there, right? And that'll also complete our low risk buy smart money reversal, low risk buy, right? And then we could go another area of accumulation here to complete that market maker buy model, moving into all-time new highs, right? So it's just taking a long time to get there, right? Because this high right here is from all the way back in October, right? That high right there is from all the way back in October. All right. So just looking at what price is doing, we can see where we are in price. We're in the middle of a buy program. We're in the middle of a market maker buy model, right? We're in the middle of a higher time frame bullish trend, right? But in all uptrends, there are retracements. In all downtrends, there are retracements, all right? And then when Phil comes back to work, you get days like today, right? Look at this right here. Look at this right here. When Phil came, look what happened when Phil came back to work. Let's go over here. Let's mark out. I'm sure what I'm talking about when Phil come back to work. Let me see something here. Let's go here. And I'm gonna put this on New York sessions. And we're gonna look at from 9:30. All right. We're gonna look at 9:30. This is 9:30 to 12, but I just go from 9:30 to 4. All right. From 9:30 to 4. All right. So last week, Tuesday, we're just gonna look at like Wednesday and Friday. All right, we're gonna look at Wednesday. Would you look at ours right here? Cause this like the Christmas time. So Wednesday, Friday. All right, this was like a holiday field one there. Market closed at like 1, right? And this was the day after the holiday. So let's come back here. This is Wednesday right there. See Wednesday price action. These are hourly candles. Let's see how price moved on Wednesday, right? Right there. Even if we look at Tuesday, see how price moved on Tuesday. Beautiful, just moving, just gradually moving up. Wednesday, price just gradually moving up, right? And then we come over here to Friday, right? Field came back. He's pissed off because he got to come back to work now. Christmas is over. Look at the price action, right? Monday, feel pissed off because he back at work again. Look at the price action here, right? Right in the afternoon, we got a nice little bounce there, but look at this price action right here, right? 2 o'clock, it went up pretty nice there. Got a little bit smoother, right? In the afternoon, right there. But look at that right there. Right? Tell you, boy, old feel. All right, old feel. That's that manual manipulation. That's what I talked about last week when it was moving so smooth during like the holiday time when we had a little short day. It was moving so smooth, right? Then that Tuesday, tell Phil one in the office on Tuesday because this was the Tuesday, right? This was Christmas Eve, and then Christmas. This was the day after Christmas. So you're looking at that Tuesday. Phil wasn't working. Christmas Eve, of course, he wasn't working. But as soon as Christmas was over, look at that trash. Look at that trash. Right? That's that manual manipulation. Okay. Manual manipulation. So this is price action here for today. Right now, looking at what we got for the New York session right there. In hindsight, looking back, right? In hindsight, looking back, this right here is not super surprising, right? Who could tell me why this price section right here during the 9 o'clock, during the whole New York session, right? This is from 9 a.m. This from 9:30 to 4 right here. Why do you think I'm saying that this price action here that we're getting here is not really surprising? Who can tell me? All right, babe, just looking to the left. Why is this price action right here in hindsight not surprising? Why do we get this trash right here? Who can tell me? Light skinned Deborah, why is this not surprising right here when we look to the left?
We made a good amount of move from midnight on down. Yeah.
Exactly. All right. We had already made a huge move, right? There. Even if you start from the beginning of the day, right? We had already, but with the algorithmic day, we had already did all of this right here in the day so far. So we came here, made a low, right? Then we at 9:30, right? Came down, took that low out, rallied way. This is that when I say we made like 100 and some point rally, right? After we took that low, rallied all the way back up to the premium. And then came back down and just hung out there. Right. So we had made a huge move down, right? Swiped out the low, rallied up from peak to trough, a trough to peak, 162 points. All right. 162 points. So this little drop here, right? Going below there, that enticed anybody. I don't know what I just did. All right, that little drop there, that enticed anybody who was chasing this short to go in, right? That rally up here, right? Especially coming above here, that enticed anybody who was looking for the reversal to go in there, right? But all they did was get highly disappointed, right? And I was up in here. I was in there with them, getting highly disappointed here. Right? Just all about the head and shoulders. Right? All about the head and shoulders. Okay. Then, right, we made a low. Then we started to push back up, started coming back into the range again. Right. And here we are now, still in that range. All right. So we're down here just engineering liquidity. So it looking back in hindsight, we can see we had made a huge move. Right. So anytime price makes a huge move, right? Just think about these as days, right? If this right here was one day, right? What and then this was the end of the day right here. All of this right here was one day, right? And then going into the next day, right? What do we what are we anticipating? Not that it has to be. What are we anticipating after getting a day like this? What are we anticipating going into the next day?
Nothing burger.
A nothing burger, right? And we look at that as a everything and nothing, right? Everything and nothing. That's something that I got from my financial advisor, Dustin. He said when you get them large days like that, you expect the next day to just do nothing. Get that everything and nothing, right? And what do we say? We say time and price is fractal. So if we get everything on one day and then we expect nothing, right, going to the next. Okay. So if we get everything, right, in the Asian in London, right, or just lump them together and say Globex overall. But if we get everything in the Asian in London, right, we kind of expecting the New York to be nothing. Not saying it has to be, but just basic price action. Get a large move. What we should say? Price make a move, then slide to the right. Slide to the right. Going in front of big news. Make a move, slide to the right. Because we get a large move, then a move. Large move, then a move. All right. Price make a large move, then slide to the right. What did we do today? Large move, slide to the right. All right. Looking back in hindsight, you can see it. It's clear as day when you look back in hindsight. Right. But inside of all of this choppity slop, there's a lot of money to be made and a lot of money to be lost. Because from peak to trough, right, throughout the whole New York session, it was a 171 point range. Right. Plenty of money to be made, plenty of money to be lost inside that 170 point range. From the highest high during the New York session to the lowest low, right? So during the 9 o'clock hour, we made the high of the New York session. During the 12 o'clock hour, we made the low of the New York session, right? And if you just look at regular trading hours, right, that's the high and the low of the day for the Qs, right? For the NASDAQ, just if you're looking at the NASDAQ just for the New York trading, that's the high of the day, that's the low of the day, right? Now for the NQ overall, the high of the day was made way back over here, right? Way back over there during the Asian kill zone. And then the low of the day was made down here during the New York lunch kill zone. But for regular trading hours, right? Yeah, that's our high of the day, our low of the day. All right. Get it? Got it? Good. All right. Let's look and see what price actually did today. All right, let's go down to a 15-minute chart. Matter of fact, we'll go to a 5-minute chart, try to get as much detail as we can. All right. We see over here during the Asian session prior to midnight, over here in the Asian and Sydney session, Sydney starts at like 6, Asian starts at like 8, right? But we typically just call all this the Asian session, right? So we start out here and we immediately set a low, set a high, right? So we come here, right? Make a high there, cross over, make a low, right? That's our range, right? Make a new high, trade back down to a discount, right? Go up, take out the new high, right? Once we take out that new high, we take out that high there. Nope, right? So we don't take out these relative equal highs, right? Take out a new high. We don't take out those relative equal highs right there going into the Asian open, right? During the 750 to 850 macro, right? We make that high there. Then we drop down, take out the low. All right. Excuse me. And we said we quickly established a range, right? Within like the first 30 minutes or so, we quickly established a range, pulled back to a discount, took out the high, then immediately reversed and took out the low right there. That right there is what? What's that move there? Walk out, walk out. What move is that?
That's your wig snatcher, Tim.
And that's a Judas swing.
Oh, it's a Judas.
Boop, boop, right? Went up, took out buy side, came down, took out sell side. All right. If you're looking for the wig snatcher would be if we just take out this little area right here, if we would have went sell side, buy side, sell side, right? That would be a wig snatcher, right? But it takes away the wig snatcher because we got all of this price action in here, right? The wig snatcher would just be sell side, immediately go to the buy side, and immediately come back to the sell side. That's the wig snatcher. The wig snatcher is like a double Judas swing.
Yeah.
Right.
Yeah.
So when we just go buy side, sell side, that's just a Judas swing. Right. Just like here. Like we got a Judas swing here. We went sell side, buy side. That's a bullish Judas swing. And then we went up. Right. Came here, took out the sell side, rejected it, took out the buy side, retraced it back down into a discount inside this wick, right there, respecting the order block, then went back up. So we had a bullish Judas swing, took out buy side, and while we was taking out buy side and came back down, that gave us our bearish Judas swing.
So let me ask you a quick question. With the Judas swing is just CERD, and with the wig snatcher is CERRD.
You mixing
Nah.
you mixing things together. You're
Okay.
mixing things together. So the Judas swing can be found inside
Right.
of either one of those.
Right.
You see what I'm saying? The Judas swing can be found in either one of those, but we don't want to say that, okay, this is the Judas swing. You see what I'm saying? So
Actually,
like when you're looking at CERD, you're looking at consolidation, expansion, retracement, and delivery, right? But inside of there, right, there can be a Judas swing here. You see what I'm saying? There can be a Judas swing right there, right? And then with the other one, you're looking for consolidation, expansion, reversal, retracement, delivery, right? And inside here, right, That can be a wig snatcher, right? That can be a bearish Judas swing. That can be a wig snatcher. That can be a bearish Judas swing. You see what I'm saying? You can find them inside there, but it's two different things, right?
I got
Yeah, you talk about two. You talk about if the delivery when we looking at this right here, and then the Judas swings are more closely related to price engine models, right? So when you got the price engine model of reaccumulation, right? Or you got the price engine model of offset accumulation, right? Now you got a Judas swing down here, right? There can be a Judas swing inside here. That could, you see, like that's the price engine model where you're you're taking it there, give a false move down, right? And then go up, right? Judas swing, right? You go up and inside that price engine model, right? And then offset, you got a false move and then go up inside that price engine model. But those are still two different things, right?
you.
The Judas swing is just a fake move because it gets confusing because it's so many things that are talking about the same I ain't gonna say concept, but same what's the word I'm looking for? Um the same thing, like manipulation. Manipulation is like the thing we're talking about. We're talking about manipulation, right? But you can touch on manipulation with a Judas swing. You can
Mhm.
touch on manipulation with the power of three. You can touch on manipulation with the price engine models of offset distribution, of offset accumulation, right? So all of these things touch on manipulation, but when you're talking about offset accumulation, you know I'm specifically talking about it in reference to um inside a market maker model at an area of accumulation. When you talk about um the power of three, I'm specifically talking about manipulation based off of a certain concept. It can be a power of three on the hour, power of three on a day, power of three on a session. I know specifically what I'm talking about, what type of manipulation I'm talking about there, right? If you're talking about a Judas swing, I know what type of manipulation I'm talking about there. I'm just talking about a quick liquidity sweep and then a move in the right direction, right? Same thing when you got like a million different 50%. When I say consequent encroachment, I know I'm talking about 50% of an imbalance. When I say equilibrium, I know I'm talking about 50% of a range. When I say mean threshold, I know I'm talking about 50% of some type of candle or block. If I say event horizon, I know I'm talking about 50% in between two PD arrays. You know what I'm saying? So it's like it's all talking about 50%, but what 50% am I talking about? Right. So that's why it gets a little confusing. But when you understand the concepts as a whole, like the confusion is like not really there no more. That's why I always stress, nah, that ain't what that means. You can, if you want to
Yeah,
think
yeah,
about it like that, that ain't what that means, because you don't want to start calling things by the wrong name, because now you're perverting the concepts. You know what I'm saying? Like the preachers back in the day used to like to say, call Bible things by Bible names. You don't want to pervert the gospel when 90% of them was perverting the gospel. But we ain't gonna get on that.
but I'm tracking with you. I'm tracking.
I want a Rolls Royce too, Nate. Hey man. Um, I don't know what I was
Yeah, I
saying.
took you way off, but that was a good little lesson though.
Well, so we we then we came out, and we gonna go here after midnight, right? So after midnight, as we can see here at midnight, price didn't even try to go up at all. Our midnight price there, our midnight open is 25,856 even, right? And the high on that candle there, if you look over here, my open, high, low, close When I hover over that 12 a.m. candle, 25,856 even is the high. So never even tried to go up after midnight. It was just all down, right? All down after at the midnight open. So once the algorithmic day started, midnight is the true day open. Algorithm never tried to go back up. Didn't try to Phil was on my live stream this weekend and said, you looking for a sweep of the daily low and to go back up? I got something for you, little Timmy Rogers. I ain't even gonna try to go up after the day start. And he did not go up at all. Right. And then he hit us with a pump fake, because the reason why I say a pump fake, right? Because look at all of this liquidity that was accumulating there. Once we came down here, right, and then set that low right there and rally back up and got that breaking market structure, what is that a sign of? Matter of fact, let me do this right here to make it even. Oh, I deleted it. God dog it. Let me go back and draw it again. Let me go back and draw it again because I deleted it. When we talked about that suspension block right there on the what's the name? When we talked about that suspension block, right? What we were saying? Well, these are the PD rays inside of our 20-day look back that we was watching. That wick and that suspension block. Y'all remember we talked about that on the live stream? Who remember that? That order block, that wick, and that suspension block, right? Those are PD rays that we was watching inside the 20-day look back. Y'all remember that? Anybody don't remember that? Okay, right. Now, I pointed that out. All right. This one right here is the closest in price. So that's why I just got that one highlighted, right? The nearest one, and because it looks back like this right here. So coming back, right? That's the first one we get to. Then that's the next one we get to. Then that's the next one we get to, right? Looking back like that, right? If we start to push down through there as we look back, that's the first one we get to. Then that's the next one we get to. Then, right, we're still inside that one there, but that's going into the 40-day look back, right? So y'all know that's how I mark my PD rates. We talked about that before, right? Inside the range we're looking at as we're going to the left, which one do we hit first? That's the one I'm focusing on. I want to see how price reacts when it get there. Okay. Now that we got all that said and done, all right, let's come back here. Right. Now remember, what did I say? We came down here, right? And we made this low right here. Right. After making that low, we came up and we got a break in market structure. Now we're coming off of a daily bullish fair value gap. What is that right there? That daily bullish fair value gap. What is that? That's a what? Talk to me. What's that daily bullish fair value gap? What is that? What do we call that? There you go, Kim. Right? That's an anticipatory reactionary point. Right? Where's that anticipatory reactionary point resting? Below that daily sell side liquidity. So we've taken liquidity and we've come down into an anticipatory reactionary point that we pointed out inside of our 20-day look back. And we created an intermediate term low, and then we got a bullish breaking market structure. Right. So getting that bullish breaking market structure, what do we anticipate happening right here? I see what it is. What is that right there? Somebody tell me what that is right there. What is that? Talk to me.
It's a Sibby.
Yep, but what about that SIBI? There you go, Kim. That's an inversion fair value gap.
Oh
We
yeah.
got we got a SIBI that's created deep in the discount of our move
Mhm.
at an anticipatory reaction near point, the first imbalance before we came down, taking out liquidity and getting a change in state delivery. All the algorithmic signature says that's an inversion fair value gap. So when we close back up, especially with a move like that and get a break in market structure, that SIBI right there should take us on up. But what did Philly Field do? Cut all the way back through it, right? Cut all the way back through it. Now that we cut all the way back through it, right? If that right there was an inversion fair value gap and we was going to use it to go back up, once we cut back through it, it should now be what? What kind of fair value gap?
Reclaim
A
Sibby.
reclaimed fair value gap. But what does Phil do? Cut back through it again. This is the definition of manual manipulation. The algorithm is giving you clear signatures. Just cut right through it. No respect for it. It's a reclaim now. Cut right through it. No respect for it. It's an inversion again. Cut right through it. No respect for it. All right. Perfect example of manual manipulation. All right. And then you say, Tim, is that seek and destroy? Nope, it's not. Tim, why it's not seek and destroy? Because we came down here, right? We set a low, came up, took out that high, and then we just stayed inside that range. We stopped taking out liquidity, right? We never left this deal. This is the dealing range right here, right? What makes a dealing range? Sweep of liquidity. That's our low, right? Sweep of liquidity. That's our low. All right. Move back up. Sweep of liquidity. That's our high. Right. If you take out a low and then take out a high, what does that create? That creates a dealing range. All right. Bullish dealing range at that, because you took the low first, then took out the high. So price is moving in a bullish manner, right? We also got a bullish Judy swing, low to the high, right? So we got a bullish Judy swing, right? Come back down, don't take out the low. Go back up, don't take out the high. Come back down, don't take out that low. Go back up, don't take out that high. Come back down, don't take out that low. Go back up, don't take out that high. Drop down, sweep the low. Go up, bullish breaking market structure. Come back down, trade back up to the high. Right. So price cleaned up over here, but this isn't seek and destroy because we were not taking out lows and highs. Right. We were just engineering liquidity. All right. This inside here, engineering liquidity. All right. Then we come over here at 1225. We drop down, sweep the low. All right. So once we sweep the low there, right. Oop, that's our low. All right. We trade back up, take out a high. All right. That's our high right there. So now this little bullish dealing range right here, right, is inside of this bearish dealing range right there. Okay. Because remember, this was our bullish dealing range there, and then we broke outside of it. So now we're inside of this bearish dealing range. That's the low and that's the high, right? So we're inside of this bearish dealing range, and we created this bullish dealing range there. Then what do? We come back down into a discount, respecting the bullish order block. Then we trade up, right? So we have a bullish Judy swing. What do? Take liquidity. That's a bullish Judy swing. Retrace back to a discount, rally up. That's your low hanging fruit. That's your reasonable objective right there. And don't even look like we hit it. Don't look like we hit that. Yep, we did. We hit it. Right. Makes sense. Right. Even in the midst of just ugly price action, the algorithm is still being the algorithm. Right. Even in the midst of manual manipulation being held in a range, the algorithm is still being an algorithm. Right. Because when we came up here and it came back down, what did we go to? We went down into a rejection block without taking out that important low. Right. Trade back up into an imbalance. We come back down into a rejection block without taking out that low. We talked about that. Right. So even in the midst of trash, the algorithm still being the algorithm. Then once it clears up, right, the algorithm still being the algorithm. Right. I think that's all I got. This makes sense, man. Hopefully the talk in the beginning helped y'all, man. We'll appreciate the talk in the beginning. Did the talk in the beginning help anybody? Is it helpful to hear that you are not alone? I am here with you. Is it helpful to know that it's not just you?
It's helpful because trading can feel like a solo journey. Ultimately, it is solo when you're making decisions, but it's helpful to know that people have been through the same valleys and they grow. And sometimes you still, after you think you kind of grown, struggle sometimes. So that's helpful to know that you can always, circle back and start again in a sense.
Trading is one of the loneliest jobs you can have. You know what I equate trading to? Right? I equate trading to playing baseball. My kids played sports. My kids played soccer, played football, they played baseball, right? Football, your flaws can be masked or supported by your other teammates. Soccer, basketball, all these team sports, right? Your flaws, they not just 100% on display. But baseball, you standing up there at that plate by yourself. Everybody looking at you. All eyes on you. And when that ball come across that plate, ain't nobody at that swinging but you. So everybody gonna see if you strike out, how many times you strike out, how many times you hit the ball. Everybody see everything right there. You ain't lost in a big pack like in football. You ain't lost in a big pack. You don't. Everybody see your mistakes. And when it comes to trading, you can be in a trading group. You can be in a trading room. You could be anywhere, but you out there by yourself. And when you hit that button, you gonna know your flaws gonna show. It could be emotional flaws. It can be I don't know what I'm doing flaws, right? I'm just chasing price flaws. It's gonna show. And if you trading with proper counts, you know what I'm saying? If you become real acquainted with the lady at the reset line. You go on the reset line, she be, oh hi Fly. How you doing? Oh, hey man. Tomorrow is Tuesday. Gang. We're gonna do a tape reading session in the morning. Um, Wednesday, I got an appointment. So we're not gonna do anything on Wednesday. I got an appointment Wednesday morning. I had an appointment today. First name basis. Oh, hi, Fly. I that's why we didn't do a pre-market analysis today for those who wasn't on the weekend chart prep. I had an appointment this morning and I got an appointment on Wednesday morning. So we're doing a tape reading stream with everybody. Um Tim, you open my eyes so wide when it comes to this trading thing. I am forever in debt to you for that. Hey, I appreciate the kind words, but hey, Monica, the only thing that open your eyes up wide to this right here is doing it, right? I'm just some dude from Fort Lauderdale, Florida, that shared my understanding of some concepts that Michael Huddleston put out there on Al Gore's internet for free. I just share my understanding of those. Some people say they like the way I explain it. Some people say they understand it better when I talk about it. I think it's just one of the things where I offer the opportunity for live interaction because whenever you're learning anything, I'm a true believer that questions matter, right? So you can't ask a pre-recorded video your specific questions. You know what I'm saying? And then if you type it in somebody's comments, they may get to it or they might not get to it. And then if they get to it and put it out, you might not see that they put it out because you may not look at all their content. That's why I do a live stream channel, right? I do a live stream channel where I afford you an opportunity to ask your hard hitting questions because that's how you know what I'm saying, you develop and you get better because while you're doing the work, you're going to have specific questions. But doing the work is what open your eyes. I appreciate you just letting me be a part of the journey. You know what I'm saying? I take no credit for anybody's success. I take no credit for anybody's failures. I pray much success to everybody. I know that this stuff can change your life, right? And all I ask is that once you get it, pay it forward, share it with somebody else, man. It could be a friend, it could be a family member, it could be a child, it could be a spouse. And once you get it and you get it locked in where it makes sense to you, all I ask is you share it with somebody else, man, because hey, it's a 53-year-old dude in Maryland who don't know me from a can of paint named Michael J. Huddleston that got on Al Gore's internet and shared his life work, and it changed their little nappy head boy from Fort Lauderdale, Florida life. You know what I'm saying? He ain't have to do that, but I'm so thankful that he did. So I treat this thing like the gospel. I spread it far and wide. And he that has ears, let him hear. Hey, man, y'all got anything else before we get out of here? Yeah. Yeah, I said that. And then Friday, we doing a tape reading with the just the diamond members. Tomorrow, tape reading with everybody in the gang, that is. Tape reading with the whole gang. And then Friday, tape reading with just the diamond members. The market is closed Thursday. Is it Wednesday or Thursday? When is the first?
Thursday.
The market closed Thursday. Mm-hmm. So we got tomorrow, Wednesday, and Friday are the trading days this week. All right. Tomorrow, Wednesday, and Friday. Let's look at the economic calendar real quick before we go. I think we got FOMC minutes this week. Did I not? Why didn't it share? Share the screen thing. God dog it. Don't you hate when you be trying to click on like the banner and like all the banners are the same color and you mess around and click something else? So we got FOMC minutes tomorrow at 2 p.m. For those who don't know, that's not the same as the rate announcement. The FOMC meeting is the rate announcement. The FOMC minutes. This is the minutes from the last meeting, and they released that. And the reason why it's high impact news is because this is when they find out what was said differently. The verbiage was changed. Did his verbiage go from being dovish to hawkish? Did it go from hawkish to dovish? Did anything change? Did nothing change? Right. So they got it as red folder because if something changed in there from the last, they'd be like, hey, last time they said inflation was transitory, but this time they said blah, 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 blah. Right. I need to buy your course. I'm convinced. Hey, Kevin, I appreciate you for being convinced that you need to buy the course. But I'm gonna go full screen to tell you this. Kevin, everything that I talk about in the course is already on my YouTube page, right? The course is just a curated, straight to the point compilation of everything that I put on my YouTube page, right? And then it has the opportunity of being mentored because we have a monthly Q&A, right? That's valuable. But do you have to spend $69.99? No, you don't. Because I go live a gabadillion times a month, right? So if you just pull up when I go live, you can ask all the questions you want to ask for free. The YouTube videos are already on my channel. Like the trade and futures segments talked about. I got how to trade futures. The first part that's just talk about trading futures, how to trade futures. The second part that includes ICT concepts. The ICT concepts videos, you got 3 playlists going through. It's like the verbiage, the how to find them in price action, how to use them in strategies. That's one series that I did. Then they got the art of reading price action, right? The art of reading price action, that playlist is the same thing again. It's just a little bit more fine-tuned. It's a talk about all the ICT concepts. And then, so do you have to pay the $69.99? You ain't got to, because it's all out there for free. Do I appreciate you for buying the $69.99? Yes, I do. I really do. You know, but just being honest with you. Just being honest with you. It's up to you. It's up to you. First link in the description below, $69.99. Yeah, man. Speaking of links in the description below, Apex still doing like 90% off right now. All of the evals right now are $19.60. I got a link down there. If you use my coupon, I don't have a fancy coupon code that I can give you, but my coupon code is in there. It's a weird code. It's weird. I'm not even gonna. It's the default. Whatever they gave me. It's ZYWWMIBQ. You have to type that inside the coupon code thing, right? So if you click the link down there and you paste in that ZYWWMIBQ in there, that'll get you whatever ad they running at that time. Right now is 90% off. Every single eval that you buy is $19.60 with that coupon code that I gave you from below. If you pass the evaluation before January the 6th, it ends on January 6th. So you got up, and if you pass it before January the 7th for 100K or less, is $65 PA fee. So you're at 80 $84.60 all in for 100K or lower. And then if you do 150K or higher, the PA fee is $125 while the promotion is going on. Right. So $84.60 all in for 25K, 50K, or 100K. Right. Y'all already know what I say. 25K, that's the easiest one to pass. Yeah, because it's like the lowest threshold, right? 50K, it give you more room on the intraday trail and drawdown. Like if you hold the trades and they go up and it's coming against you and stuff like that right there. Excuse me, give you more room, but you got to do more to pass. You got to do more to get a payout. It's up to you, whichever one you want to go for. But they all the same price right now. You know what I'm saying? So, and if you pass it before this the end of the 6th, right? Before the 7th, then you can pay that discounted PA fee, right? That's how it works with Apex. The discounted PA fee is only good for the window of the promotion, right? Right now, the promotion is 90% off. And then if you don't pass within a month, every other month, it's going to renew at 50% off. Okay. So, but the PA fee, if you don't pass it before the end of this promotion, then the PA fee going to be whatever the regular PA fee is for the account size that you get. All right. So ain't no need to try to rush. And you got plenty of days. You got the 30th, 31st, the 2nd, the 5th, and the 6th to try to pass. That's 1, 2, 3, 4, 5 days. Right. That's 5 days you got to pass the eval. If you go over there and use that link in the description below, it's like the third link. It's the third link in the description below. Right. And use my coupon code to get that 90% off. Hey, man, that's enough sales pitch for the day. I'm gonna go ahead and get out of here and go watch me some Teen Wolf. Go watch me some Teen Wolf. Hey, thus far, we have been getting the Santa Claus rally, right? The Santa Claus rally, based off of historical data, is the last 5 trading days of December through the first 2 trading days of January. And thus far, we've been getting that. We had an expansion to the upside, right? And then today, we got a retracement, right? Let's see if we, for the rest of the week, if it plays out that we finish the retracement and start to expand again. Because how does IPTA deliver? One of the 2 ways it delivers price is what? Consolidation, expansion, retracement, then delivery, right? So we're looking for that consolidation, expansion, retracement, and delivery, right? Because we're bullish and we consolidated and we started to expand. So we don't want to see a consolidation, expansion, and reversal, retracement, and delivery. We're looking for the consolidation, expansion, retracement, and delivery. We compared it to last year. Last year, during the Santa Claus rally time, we were in a sale program. Last year, the Santa Claus rally didn't play out. That played in line with the sale program that price was in coming into the end of December during the time of the Santa Claus rally. We compared it to this year where we're in a buy program going into the Santa Claus rally. So a consolidation, expansion, retracement, delivery will complete the buy program, will complete the market maker buy model, will complete the Santa Claus rally. Time and price. When we talked about time and price on the swing trade higher time frame, time is a seasonal time when price should be bullish. Right now, price is in a buy program. Time has met price. Right. So now we're looking for bullish signatures. Right. Does it have to happen? No. That's why we have invalidation points. If it trades down below an invalidation point, you say, huh, we ain't getting no Santa Claus rally. But if it doesn't trade below the invalidation point, just look for the bullish signatures. All right, then. Until the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we like to call price action. It's your boy, Timothy Lee Rogers, Sr., a.k.a. Aranya Grande. That's just me, big spot if you know hablo español. Y'all be safe out here in these trading streets, man. Gone. Yeah.